Hello everyone, hope we're all doing well. This is Paul from the Pin Academy. So in this video, I'm just going to do some little clarification about something we've already spoken about, but I'm going to explain it a little bit more so that we can practice, just remind ourselves, and we also grasp the concept very well. So look, in front of you here is my chart on V101S. It's a synthetic index. In case you've not heard of them, these are uh, these are securities that you can trade 24/7. So make sure you get acquainted with them and you start trading them. So we're going to be speaking about entries and exits. How do I determine where I'm going to take my entry from? And how do I determine where my target is, how I'm going to exit, or even along the way, sometimes the market finds some hits and then it doesn't reach the target. How do we manage that, right? So those are the things that we're going to be speaking about. Then also, I'm going to be explaining more on change of trend. And then also, I'll be explaining how you can manage or completely reduce your risk. Remember, trading carries very high risk, but the more you minimize your risk, the better your rate or your percentages of your probability of winning and being profitable over a long period of time is, right? So you can look at my chart. This is a chart I've been using for some time. Those I speak to privately, or those that I would do analysis with privately, you know that we have been having this for some time. It's not something that I've just made right now. All right. So it's what we're going to use to practically illustrate what we're going to be speaking about. Remember, we have said we're going to be talking about entries and then the exit. Then also along the way, sometimes there are those levels that hold trades from reaching our targets. How do we manage them? Then also, how do you greatly or to a high extent reduce our risk? Then I'm going to first be explaining to you the two types of entries that a trader can make, and then which one would I recommend in case you're still struggling. And then for those who are experienced, you can use both of them. Then, just like I mentioned, we're going to first be re-explaining what change of trend is, right? But all in all, I won't be using this exact same chart because it has all the things that I want to explain to you guys. I'm going to remove everything because this is something that has happened that we have used, and I'm going to just remove everything, and then we do what? We do it together, right? So allow me to just clear my chart here. I'm just going to come and I clear it up. So, uh, first things first, right? Let's first speak about the types of entries that we have available. Now, we have two types of entries. We have the first type of entry is what we call uh, entry at reversals, right? And then we have uh, entry at continuations. What do I mean by entry at reversals? For example, if you were to observe this market, it has been pushing down. It has been making lower lows and lower highs, lower lows and lower highs, right? So now, according to our analysis, which we are going to do shortly, we expected the market to make a major reversal. By reversal, I mean that in a bigger time frame, we expect it to change a structure so it changes direction. So that's the first type of entries. Now, this type of entries are usually very tricky. Usually, I don't recommend someone who is still a struggling trader to take such type of entries, like at major levels whereby the market is going to start taking to start changing the direction from maybe moving downwards to start, let's say, like in this case, the market was moving downward, then it reaches somewhere and starts moving upwards. I really don't recommend someone who is a beginner to start looking for such type of entries. Let me just repeat that. Reversal entries or reversal type of entries, this is when the market is making a major shift in direction, right? So we look for entries in those major levels to start looking for the opposite direction. Now, I don't recommend, once again, a beginner to do that. I recommend a beginner to use the second type. What is that? The second type is continuation. Now, continuation type of entries, this type of entries are when the market has already changed trend and now it's already trending. For example, let me just give you an example. Let's say if the market was coming downwards, let's say it was making low, lower high, lows, uh, breaks low, lower high, low, lower. This is a continuation already. The market changed trend from around here, and then I would recommend, if you're still struggling, actually for all types of traders, this is the best type of entries that you guys can be looking for. Where the market is already continuing in that particular direction, not from here. So these are the two types of entries that the two different types of traders can do. But experienced traders, you can use both of them, right? Actually, for experienced traders, the first type that we spoke about, the reversal type of entries, are very perfect. They give them even what most of you have named sniper entries, which I'm not a very big fan of, right? So that's the first thing I need us to first clarify on. Then also, let's remind ourselves about, before we go into the entry and exits, let's remind ourselves about the uses of the timeframes, because the timeframes play a very important role in this aspect. Where do I determine from my entry and where do I determine from my target? Now, remember, we said that we have three types of timeframes. And then the first one we said gives us direction, which we're not going to speak about so much today. The second one we said gives us what? We said the second one gives us the structure, right? So this is one of the ones that, this is the one that one of them that we're going to focus on. Then the third one, which is the entry time frame. So I want us to focus on these two here, the structure time frame and the entry time frame. Now, by structure, I mean the topics that we have been studying here. Let's say an impulse. You want to trade an impulse, or you want to trade a W, you want to trade a head and shoulder, you want to trade an inverse head and shoulder. So that's what we mean by structure. Or you want to trade the trend line, a third touch. For example, an example on V75, right? That was a third touch on a weekly. So that was a structure that you could trade, right? So, I mean, in the major drop, the major drop that has happened on V75, if you guys have been following the setup that we shared, that was a major third touch point on a weekly trend line, which was a diagonal resistance, right? So sometimes a structure, people think structure is just maybe shapes. No, structures include shapes and patterns. So the two of them make those, it makes that, right? So when you're going to trade structure, that's where we identify in the structure time frame is where we identify our target, right? Please, guys, in the video of uses of timeframes, I stressed that out. I said that in the structure time frame is where we identify our target, or what sometimes people refer to as take profit. Please, if you want to get a decent risk reward ratio, the time frame in which you get your structure is the time frame you're supposed to be using to get your target. Then when it comes to entry, this entry time frame is whereby you determine the invalidation, because we want to minimize or want to reduce the gap between the loss and that. Because if you're to notice, most of you are trading with 1-to-1, 2-to-2, or sometimes even the loss is bigger than the profit. Why do I say the loss is bigger than the profit? Because most traders trade on what we call hope. You enter a trade, you don't know where your invalidation point is because you didn't determine these parameters before, right? So now, as long as you're following us, I want us to streamline that, right? You have to determine all these things before, just like how we're going to do it here. So I'm going to look at both the types of entries here. Then we see how you could have implemented this. And also there's going to be a continuation. If the market changes trend, there's going to be a continuation. So which one is the entry that you take? You'll determine just from here. And you'll go and back test. I'm using synthetic here, but you'll go and back test even on a trading view and the rest, right? So we have spoken about the types of entries, we've spoken about the uses of timeframes, or reminded ourselves. Now, just before we go to the practical, to break it down, let's talk about what change of trend is. Just a reminder. Now, change of trend is, for example, I normally like us to use it in entry time frame, right? In entry time frame is when the market, let's say I've marked, I'm expecting the market to start buying from a certain point. This is my area of interest. So when I go to my entry time frame, let me just remove this. So for example, I've marked this level here and this green level down here. So when I go to my entry time frame, let's say like H4, then in this H4 time frame is whereby I will be observing my change of trend. For example, if the market was coming down, lower low, lower high, lower low, lower high, lower low. So in this area of interest here is where I'm going to be observing a change of trend. What's the meaning of change of trend? Change of trend is when the market was pushing down, but then I'm looking to, my bias is bullish. So I want the market to take a trade at the point whereby the market has stopped making lower lows and lower highs, and it has started making higher highs and higher lows. That act or that process is what we refer to as change of trend. Are we together? So I just want to explain to a layman's language. I don't want to explain it technically so that you miss it out. let me just explain it again. Change of trend is when the market was previously making, in your entry time frame, don't forget that the market was making lower lows. Let's say I'm looking for a buy. The vice versa is true, but for this example, I'm looking for a buy. So the market was going lower low, lower high, lower low. So the point at which, or the act by which the market shifts or stops making lower lows and lower highs and starts making higher lows and higher highs. That is what we mean by change of trend. But now, want to take the trade when the market has just shifted, not when the order shifted, because they will be having late entries, right? It's what we mean by change of trend. That was just a reminder. So now we're going to do it practically on V100. Let's break it down together, starting from our directional time frame, which we normally use. I normally use monthly as my directional time frame. So looking at this monthly time frame, what do I observe here? I observe that I actually have an M, right? But overall, you can see this market is on a downtrend, lower low, lower high, lower low, lower high. The market attempted to take it up, but it failed. Then it continued lower low, lower high here, came and tested this level. Then we continued down. The market broke down. It had not tested this level here, so this push up had just come to test this level. But in the process of testing, the market created what? An M, and also we had a level here. So I'm just going to mark those parameters to help me identify the direction properly. So overall, we're in a downtrend, but we have structures that can be bounced, can hold price. For example, you can see this level here, this standing point here, price was held, right? Then in the process of also testing this low here, let me just mark the low that I'm talking about. In the process of testing this low, what happened? You can see the market created an M. This is the M I wanted to show you guys, this one here. This M here. We have spoken about M's and W's. You can look for the video just on our channel, this M. So the neckline has been broken. It's a complete M. So what are the rules of an M? We expect the market to be going upwards to test this before continuing lower. Remember, we said overall, we are supposed to be pushing down, right? But remember, monthly is too big. If you're going to focus on monthly, you need a lot of money. That's just direction. Now, when I come to my structure time frame, which is weekly, what do I observe? I observe that the market was actually going up and then it shifted. Now, this is the first type of entry that we spoke about, but of course, we don't do a change of trend in structure time frame. I've already emphasized that. I was just trying to make you understand the concept. The market was making an uptrend, but now it's like starting a downtrend, right? So the market created the structure, an M also. This is a big M. You can see it with a lower high. Then we pushed down. So this is an impulsive move. You can use Fibonacci here because we have already an opposite candle here. And we expect the market to come and make at least 3 retracements to this particular level. So I'm just going to mark it also. I'm just going to mark these lows here. I'm just going to mark these lows. Let me just mark this low here, right? So there's a possibility the market may come to this low. Then also remember here, if you're to observe properly, we're making what we call a W, right? But ultimate target is this one here. But remember, we said sometimes along the way, we just see the market reversing and you don't know what has made the market reverse. We have gotten a lot of complaints like that we follow the analysis, we make proper analysis, the market first takes me out, then continues. This is the reason, because you're ignoring those hidden structures and mid-term levels. For example, our target is this one here, but along the way, we have a structure that could hold price. Why is this structure very important? Because you see here, it was a resistance. The market broke above, tested it, an improper retest, but you can see the market came back and again tested it, meaning this level is very, very crucial, this area here. Are we together? Then the market has broken down. So meaning, again, when the price comes back to it, it could push price further down. So you have to be aware of that also. So now, remember we said we set targets in our structure time frame. Now, this is our structure, meaning that these two will be our targets. This and this. These will be our targets, guys. Those threats, all those turning points that you see, or the structures that you're trading. For example, if you're trading an M and this is the neckline, this neckline will be your target. But of course, you'll just put if you use TPs, it will be slightly just below this area here. Are we together? If let's say you're trading an impulse, the Fibonacci retracement levels will be your target for the extensions, right? So this will be our targets. Remember, we've said we're speaking about entries and exits. So we have already gotten our targets here. Now let's go to the daily time frame, just now to confirm my structure. I'm a weekly trader, but remember the time frames are up to you. You can choose any where you get the direction, structure, and then the one that confirms the structure. So if I'm to come here, we made analysis on this when we had just broken above this neckline here, and we wanted the market to come back down and retest this area. And you can clearly see the market came and retested this area, and then it was supposed to push higher, but it has been moving sideways. Are we together? So I know that I've gotten my target and everything, but in daily also, I can see that I have a threat here, which I'm just going to mark for you and so that you can see it. We have a threat here, right? I already marked it. If you saw it earlier on in the chart, it was there. I already marked this area, but with just a horizontal line. So this time I'm using a slab so that you can see it properly. So we have these two levels that we expect the market to break above, retest the neckline and push higher, but didn't break this level. So it has been consolidating here, and we're going to see the reason as to why. So now when you come to the entry time frame, let's just go back to the entry time frame here. Now, when you observe the entry time frame, let's look at the two types of entries. Now, the first type of entry that we talked about was when the market is now making a major shift of direction. And in most cases, it's not just going to happen like that. That's why I see it first stalled here. Are you getting it? So now for that major shift in direction, let's first observe. The market made a low here, lower high, and a low. But you can see these strides are so big, lower low, lower high, lower low. Then the market started consolidating here. So in most cases, when the market does this, right, it means that this area here is going to also hold price, and also this area. That's why I've marked this area, this green level here. So the market broke above here. This would be best for intraday traders. So when the market broke above, we expected it to push price. Why? Because it is a fresh area. It had not been tested. You see? So price was pushed back down to retest this area and again pushed back, right? Now, why was price playing just between here and not pushing higher to this level? Now, of course, currently price is pushing to this area, but also when it reaches here, we shall expect it to first push price back down because this is a fresh, untested area, unless the market aggressively breaks through. Are we together? So in this case, the market has already broken this neckline, but now this sideways movement, what is causing it? And as a trader, how would you manage yourself? Now, this now is going to be for people who have been following whatever we have been posting. If you guys recall the rules of entry that we posted, by now at least you guys will be knowing that we talked about the market will first want to grab liquidity. You can see here the market made a turning point here. Here, significant level holding price, you can see 3 times. Then it came and took out people, meaning that we have a false breakout here. Are we together? So I'm just going to mark this false breakout and turn it a different color. You're just going to observe it here. I'm going to turn it to blue. So let me just change the color to blue so it doesn't confuse you. You can see. So meaning that when the market was playing here, it wanted to trap people to enter early before it comes and takes them out so that it can start buying to this target. Remember the targets that we had marked were these ones here, but remember along the way also, as you're going to the lower time frames up to your entry time frame, these levels that have not been tested are threats. Remember at first we had only 2. We had this first target and the upper one. We have another upper target up there, but now we have untested level here. And also we had this untested level, but in this case, we've already tested this. But if if that not happened, remember I've just said I'm explaining to you what happened, and now we're going to look at how next are you going to approach this. So if this level here, we had not traded it, we'd expect to come and test it because it's fresh, give us a retracement, then come to this. But you can see it first played because we had untested level here that the market had to come and test. You can see again it came, gave false breakout, and tested it properly. Now we have explained exactly this, and happens all the time. Check on currency pairs, check on commodities, check on everything that you trade. You will see these similar patterns happening. Are we together? So that is one. Then secondly, now where do I expect the major continuation entry to happen? The major continuation entry to happen, which it will happen when we break out of this major level that the price was consolidating in. And currently price is breaking out of this area. Let me just mark it properly for you. It was a hidden structure in the daily time frame. This area here. This area. So when I go to H4, we're currently breaking out of it, right? We're currently breaking out of this area. This is the area I'm talking about, this area here. So when the market breaks out, it takes out this area. Remember, we have a fresh virgin area that we want the market to stretch to here, then gives us a weekly test, just like it did here. Stretches here, gives us this test, then we can continue to our target. But remember, you can use also these ones as your targets. Now, the question is, where are your stop losses going to be? Stop losses are going to be where the market has not tested. You can use where the market has not tested or just slightly below where the market took out people's liquidity. For example, here, if you want to enter from here, your stop loss would be below this level here, right? Because now you know that the market is coming to test this. We don't expect to continue lower. If it continues lower, then we are wrong because we can't be all the time correct. Are we together? So these are the two types of entries and how you can do analysis and connect it up to the entry time frame. You can clearly see how our approach is top-down analysis, or what we call multi-time frame analysis. And it's what we use all the time, every day, even in our trading. It's exactly how we approach the market. We're not showing you what we don't use. If you guys can practice this, it will take time. It's not easy. It will take time, but practice and everything will make sense. So if this is what you're looking for, do not forget to like the video so that many people can come across it. Also, if you just come across our channel for the first time, make sure you subscribe and do not miss out our weekly uploads. Have a nice week.